This is brought to you by John Daniel and Partners LLP.
Being penalized or facing other legal consequences which emanate from not being tax compliant. And finally, from the insights that we'll have reaped, we'll be able to implement better strategies insofar as proper record keeping and tax reporting is concerned. And just before I go to the next slide, it's good also to appreciate that the Kenyan economy is made up of mostly the small and medium sized enterprises. So it's a very crucial demographic when we look at the Kenyan economy as a whole, meaning the tax authority may be very much interested to see and to enforce tax compliance amongst these businesses, because there are very many. So this session today is just to prepare businesses and where maybe they have been missing particular information with regard to certain tax obligations, we bring them up to speed. So to start us off, before you begin in a business, the first consideration, among the first considerations you will make, your business structure decision will feature at the top of the list, because your business structure will determine your tax obligation. It will determine how you scale. It will determine how you do partnerships with other clients. It will determine even how do you relate with the other agencies, for example, the Kenya Revenue Authority, or maybe other regulatory authorities. So your business registration is very crucial. And we'll begin with sole proprietorship, which I believe most SMEs operate under. And sole proprietors, they are subject to personal income tax. And this one falls under the tax bands of the individual income tax, which normally are done within the tax bands of 10 to 35% of your income. And if your turnover is between 1 million and 25 million, you have also an obligation to pay turnover tax. So you can either be under the normal income tax regime that I have discussed as the first item, or you can be under TOT, turnover tax, if you are within that threshold. And TOT is charged at 1.5% of your gross turnover in the year. Then, sole proprietors are also obligated to register for VAT and nowadays ETIMS, where their revenues for the year, they exceed 5 million mark. They are also obligated to comply with the withholding tax regulations, especially if they are dealing with certain services. Maybe you are dealing with some consultants. Maybe, for example, you have a tax advisor or an accounting firm doing some audits for your enterprise. When you are paying them, the law requires you to withhold 5% of the invoice amount and remit the same to the KRA. And there are several other tax obligations that a sole proprietor may be required to comply with. This includes the advance tax. Advance tax is mostly paid by the people who are in the transport industry. we have the capital gains tax, or the CGT. Then we have installment tax, and we will be able to discuss installment tax in the later in the subsequent slides. So one key element of sole proprietorship is that it has higher personal tax burden to the sole entrepreneur, because as the income grows, it means you will need to pay more taxes within the tax bands that we have just discussed. The second one is partnership. So partnership can be general or limited, and a partnership is treated differently from companies and sole proprietors, because partners of any partnership, they are taxed on individual level. The share of their profits in the partnership is what is passed to their other incomes to make up what will be chargeable to tax in a certain year of income. So, for example, if we are in a partnership of X and J, maybe at the end of the year we have a net profit of 50 million, and maybe how we share our profits is on the ratio of 1:1. So every person is supposed to take home 25. I said 50,000. Okay, 25K or 25,000 for every partner. So 25,000 is what will be taken and added to your other incomes. If you are earning other incomes, maybe you have rent, or you are doing other businesses. So that will be put together and now charged the tax rate for the individual. That is between 10 and 35%. They are also liable to withholding tax regulations. And withholding tax, like we have discussed under sole proprietorship, applies to certain services, and there are various categories and rates of the amounts you are supposed to withhold. Maybe that is something that you may want to understand further. They are also required to register for VAT and also for e-teams, especially when they hit the 5 million mark in terms of their revenues. The beauty with the partnerships is that the partners now can share the tax burden, contrary to sole proprietorship. The other one is a limited liability company. So companies, they are separate legal entities from their owners. So if I own, or if I'm a director to a certain company, my tax, the tax that I'm supposed to pay at individual level, is different from what the company should pay. So companies pay their own taxes, then myself as a director, I'll also make my own disclosures of the tax I'm supposed to pay and pay. These ones in Kenya, the resident companies, they pay tax at the rate of 30% of their net profits, while the non-residents, they pay 37.5%. These ones also, especially where they fall within the threshold of turnover tax, that is between 1 million and 25 million, they're supposed to also be under that regime of turnover tax. But it's either you are under the income tax or the corporate tax regime, or you are under TOT. So you cannot be in both. The other bit that applies to this limited liability company, but it also applies to the others, but mostly features under companies and maybe partnerships, is the payee. Pay as you earn applies when you have hired employees. So if you have employees, KRA or the tax authority requires you to register for that tax obligation and do monthly returns, like we shall see in a later slide. withholding tax payments, withholding tax on payments to residents and non-residents. For example, if you are dealing with a resident supplier of services, like let's say management consultancy services, if the supplier is a resident, is a resident for tax purposes, you're supposed to withhold 5%, and if they are non-residents, you're supposed to withhold 20%. So, like we have seen in the other business structures, VAT and also ETIM's registration is also required when these companies get to 5 million mark in terms of their turnover or revenue. And also other tax obligations may apply based on what the company does on a day-to-day basis. For example, if you are dealing with excisable products and services, you are supposed to register for excise duty, and you also register for the ECMS in iTax, so that you're able to account for the stamps that are usually issued. For example, if you are dealing with the liquor or soft drinks, there are those stamps that are attached to the bottles. So those are just a few. There may be several based on what your enterprise deals with. So maybe that's another area that you may want to understand further. Having talked about the business structures, now let us see, how do you set up a strong financial system that will ensure you are tax compliant? We'll begin by discussing why we need to set up a robust financial system. Research has shown that poor financial management leads to inaccurate tax reporting. If you are declaring inaccurate tax, it means at some point the tax authority will slap you with penalties and fines, so, and that will bring up compliance issues, which automatically they will either derail your day-to-day operations, or they will paint a bad image of your organization. And to just handle that, or to address that problem, one thing that has been very crucial is having a good accounting software or a good accounting system, so that you're able to track your finances accurately in terms of the incomes that you are getting, the expenses and their categorization, all that, and also generating the financial reports that you need, which will help you to know how much tax do you owe the tax authority. So without proper record keeping, by the help of a good accounting software, chances are you will end up in problems when it comes to filing and declaring the accurate and the rightful tax that you should render to the KRA. How do you, having seen how to, it's good also to look at the steps that can help us attain these robust financial systems. One is having a dedicated business bank account to separate personal and business finances. And this one is very crucial, and it is a very pervasive problem among SMEs, whereby you're operating a business, a small business, but you are commingling the revenues, the finances of that business with your own personal finances. So when you do that, it becomes very difficult to determine, for example, the amount you should pay tax. Sometimes also to track your revenues and expenses for that particular enterprise, it becomes very difficult because you have commingled the finances from everywhere. Number two is using a reliable software. And nowadays, we have very many systems, accounting systems that can help you keep your books in good shape. And I've just mentioned two here, but I know there are several. For example, ourselves, we use Zero to serve our clients, and it works so well. We also use QuickBooks. You may have heard about others. What we are saying is, if you identify a reliable accounting software, can help you a great deal to track incomes, expenses, be able to generate the requisite reports that you need, and that generally will help you to also remain tax compliant, because you will declare the right tax amounts, and you're also able to file them on time. The other bit is keeping accurate records, be it of sales, expenses, payroll, tax filing, and any other record that is necessary to support your tax disclosures. And like we shall see in another slide, the law requires you as a business to keep and preserve these records for a period of at least 5 years. Because you may have filed your returns for 2022 or 2023, but maybe later, 2, 3, 4 years down the line, maybe the taxman decides to do a further assessment of what you declared. And if they raise some questions, or they add an additional tax obligation besides what you had declared, you will need the records to support or to object what they are saying, because the burden of proof is always on the side of the taxpayer when there are disputes with the tax authority. So it's important to keep very good records. The other important thing to do is reconciliations. And when dealing with clients, this is something that we have observed, whereby regular reconciliations are not done. And when you don't do regular reconciliation, that is between the bank, your bank account, the transactions that have been done through your bank, the balances, vis-a-vis what you have in your cash book and your records. They ought to tally all the time, so that at any given point, you are aware of where your business stands. So this is one area that most businesses maybe they fail to give it the attention it requires, and it's very important because it helps you to have even the status of your tax compliance at a go when your accounts are reconciled. Now, having looked at those steps, we want to look at tax filing and how to adapt the compliance best practices in our businesses. Number one, I want us to discuss meeting deadlines. There are several deadlines based on your tax obligations. Like we have seen in the previous slide, there are several obligations that the law requires you to comply with based on what you do. And to start us off, we have the general payroll obligations. They are around 5: pay as you earn, affordable housing levy, NSSF. We have nowadays SHIF, which was previously NHIF. Then we have NITA. Some businesses who deal with who are in the hotel industry, they file also for catering levy. So all these, they are supposed to be filed by 9th day of the following month. So for example, in January, these because most of these they are deductions that you do for your staff. You are supposed to remit them by the 9th day. So if we are looking at January, by 9th of February, any business should have filed the returns for all these obligations and remit the same. The other one is withholding income tax and also withholding VAT. These ones, you are supposed to file returns and make payment within 5 days after you have paid your supplier or after you have made the deduction. So if we are dealing, for example, with a consultant or a supplier of any service, and you are supposed to withhold a certain amount, you are supposed to do that within days and remit the same. We also have the VAT, the monthly rental income, the excise duty, turnover tax. All these, they're supposed to be filed by the 20th day of the following month. So taking the example that I've just given of January, so if we are looking at January, by 20th, which is today, of February, you are supposed by midnight to have filed the returns for these obligations if you are eligible to do so, and make the payments. Then finally, we have the installment tax. Installment tax cuts across all the business structures, from sole proprietor, partnerships, and even the companies. The law requires you to use your previous year's net profit to project the profits for the next year or for the subsequent year by adding 10% of your previous year's profits. For example, if you made a net profit of 100,000 in 2024, you project that in 2025 you will make 110 as net profit, so that now you can calculate the tax that will be payable to the tax authority for that particular year. Then you divide that amount in 4 quarters and in 4 installments. So the first installment, for example, the first installment is supposed to be paid in April, by April 20th. The second one is supposed to be, if you are using the normal calendar year, that is January to December. So the first one should be paid by 20th of April. The second one, 20th of June. The other one, 20th of September. And the other one should be paid after the year end, by 20th. By 20th of the month following the year end. So there are penalties that are related to failure to file the installment tax. So that is something that you may want to understand if you have been compliant thus far. We have talked about record keeping. And record keeping, I would say, is the backbone of tax compliance for businesses. Because if you don't keep good records, there is no way you are going to file accurate returns and pay the accurate taxes. So it's very important to maintain the receipts, invoices, payroll records, bank statement, and any other record item that is related to the transactions that you have done in the course of a year of income. Like I had mentioned, the tax authority requires you to keep these records for at least 5 years, so that in case anything arises, now you can use those records to support your argument or your disclosures. There are mistakes that most businesses do. And number one is to misclassify the expenses. Remember, not every expense is deductible when you are paying the tax or when you are arriving at the tax payable. But now this one has been solved partly by e-teams, because any business that has onboarded e-teams, the system is able to capture all these expenses and classify them where they are supposed to be. But now for most SMEs, because e-teams is supposed to be onboarded by businesses that have turnovers above 5 million. So for businesses that are below that, you may want to classify your expenses correctly so that whatever is claimable, you are able to claim, and you don't mix up expenses which some are not claimable. For example, if you have gone out there for your own personal meeting or your own personal errands, and maybe the company, you have used the company's or your business's finances to pay for those expenses. At the end of the day, you see, you cannot claim that those were expenses for that company, and they should be excluded from the amount you are supposed to pay tax. So it's important to really classify these expenses correctly so that you can calculate or you can arrive at the right taxes to pay to the taxman. The other one is non-registration for e-teams, like I've just said. The law requires right now that businesses should register or should onboard e-teams when they hit the 5 million mark in terms of their turnover. So, and failure to do that attracts hefty penalties. So this is a mistake that most businesses have done maybe in the last 1 or 2 years, and it will definitely cost them some fines, some penalties. Businesses sometimes file incorrect VAT returns, and good to say, recently I think KRA has been doing some good job, because on VAT obligation they have incorporated an auto-population mechanism of all your purchases and sales. So that helps to ensure that you file accurate returns, because by the time you are going to download the worksheet that helps you to capture the business sales for the month and even the purchases or the expenses, it has already captured that when you are downloading it. You just confirm with your records and you file, then you pay. But for businesses that are outside e-teams, it is very pertinent that you ensure your VAT returns, they are accurate, to avoid the penalties and the penalties that comes with inaccurate VAT returns filing. The other one is you can do so well in the first 3 steps or in the first 3 elements, but then fail to remit. Suppose you have classified your expenses so well, you have even gone ahead to register for e-teams, you have even filed correct VAT returns, but finally you drop the ball at the point of remitting those amounts. So whether it's pay as you want, withholding tax, or any other deduction, you are supposed to remit it in time to avoid the penalties, like we shall see. The other thing that is very important is seeking professional help. Sometimes businesses, they fail to be compliant, not because they have made that decision to be non-compliant, It's because maybe they lack knowledge, they lack the capacity to be able to do what is required of them by the tax authority. And it is at that point that you need to seek professional help from tax consultants like ourselves to help you with compliance matters. And also, besides just compliance, we can help you, or any other tax consultant you can approach, they can help you to optimize tax benefits, which we call tax planning. Then finally, on that bit of seeking help, you can utilize KRA's taxpayer education resources. There are several. We have what they call KRA TV. They have several webinars they do. They have various publications that they post or they host in their website. All those resources, they are necessary to help you be up to speed on what you are supposed to do as a business. Having said that, I want us to now look at the recent tax updates that have been effected. It's good to admit that recently tax changes have been so pervasive, like they have been happening every now and then. And I know most businesses and most taxpayers sometimes they are not up to speed on what is prevailing. Today, a change has been made. Maybe 6 months later or 1 year later, some other changes have been effected. So it's good also to remain updated on what is prevailing at any given point. I'm going to begin with the most recent ones that touch on NSSF contributions. Previously, we had 2 tiers of NSSF contributions that we deduct from our employees' salaries. The first tier was up to 6,000, which was charged 6% of that, which was about 420. But that has been revised upwards to 7,000 as the minimum, or as the upper limit for the first tier, to 7,000. And when you calculate 6% of 7,000, you get 480. The upper limit also for the second tier previously was 2160, but that now has been revised upwards to 4,320 for both the employer and the employee. And it's mentioned that the upper limit, the one that we are discussing about 2160, was up to 35,000 of the gross salary of an employee. But that has been revised into around double of the same value, to about 72,000, which gives 4320 when you calculate 6% of 72,000. So this is a significant increase, because remember, this one affects both the employer and the employee. The employer is supposed to match what they deduct from the employee's salary. And this one is important because it impacts your business cash flow. It impacts on your payroll expenses. So it's important to take consideration of this change and do the necessary plans. The other one is about tax deductible contributions. These are contributions that are deducted before you arrive at the income tax payable from the income that you have earned. Previously, only NSSF was deductible, but recently the tax authority or the national treasury added chief contributions and also the affordable housing levy. What this means is, before we arrive at the amount that we will charge, the rate at between 10% and 35%, will reduce that by these deductions. The other one is contribution to post-retirement medical funds. So if while still being employed or in your prime years, you are saving for post-retirement medical funds, now you are allowed to deduct those contributions up to a limit of 15,000 per month. And in a year, you can deduct from the amount that should be chargeable to tax by 180,000 in a year of income. The other one is on the mortgage interest. So if you have taken some mortgage to buy a house, previously you could claim 300,000 in a year, but that now has been revised upwards 12,000, no, 5,000 per month. Not really. That has been revised into 360. You can do that calculation. 360 divided by 12 for every month. So before you arrive at the amount that you should charge for tax in any year, your mortgage interest go beyond 360,000 in a year of income, you're only allowed to claim or to deduct only 360 in that year. The other one is on pension contribution. If you are contributing to a pension scheme or to a provident fund, you are also now allowed to claim 300,000 from the amount that you should charge to tax. The other bit on the changes was on employee benefits. So any benefit that you, as an employer, you give to your employee, it could be an advantage or facility provided to an employee, anything with a total of annual value below 60,000, that is around 5,000 per month, it will be now exempt from taxation. And we also have another one before I discuss the tax amnesty. There is also the employer provided meals. So if as an employer you provide meals to your staff, the amount that is tax-free is to a maximum of 60,000 per year. That is about 5,000 per month. If it goes beyond that, that will be chargeable to tax. Then as an employer also, if you are making contributions to retirement funds in relation to your staff, then and then these contributions must be made to registered pension schemes and or maybe gratuities that you give to your staff or similar payments for each year of service. Now the tax-free amount it means that you are able to claim this before you arrive at your tax payable, or not tax payable, but the amount chargeable to tax or the income chargeable to tax. Let me go back now to tax amnesty. We have a tax amnesty that is ongoing for years before December 2023. So if you have any arrears that you need to pay up, maybe for example you didn't file your returns in 2022 or in 2023 and already you have been penalized, you can apply for tax amnesty for the interest and penalties to be waived. But if you have some principal tax that is outstanding, maybe there is some tax that you were supposed to pay in 2022 or 2021 or thereabout, the interests and penalties in relation to that principal tax, once you apply for the tax amnesty, they are waived, and then you can discuss on a payment plan with the tax authority on how to clear the principal tax amounts. So this one is running up to December, not December, but June 30th this year, June 2025, for periods up to December 2023. And this is a good tax planning opportunity for businesses to take advantage of, especially if you have accrued interest and penalties with regards to tax compliance. Now, as I finish, you can agree with me that tax compliance is very crucial if you aim at building a sustainable business. Because if you are not tax compliant, your business can get into troubles with the tax authority. We have seen businesses even being closed down. You have seen even in maybe on our TVs or even social media, some businesses have been closed down by the tax authority due to tax issues. So remaining compliant ensures that your business is sustainable. The other one is proper record keeping. Like we have said, record keeping is very crucial. It's a backbone. It's something that you need not to overlook, because this, number one, like we have seen, it simplifies your tax filing. And also, if there are audits by the KRA or even the normal audits that you will do for your business, these records will be very important. Thirdly, like we have seen, it's very important to understand your tax obligations. Because if you understand your tax obligations, you are able now to take advantage of any financial planning opportunity that you may get, if you understand. But if you don't understand, you will end up, for example, falling to traps of non-compliance, or sometimes even paying more taxes than you should actually pay. It's also very important. We are now in a digital era to ensure that we are first aware of the tools available, and this goes beyond even our businesses. For example, KRA has really improved on how we file the returns and do the remittance. Whether we are talking about e-teams, where we are talking about the the ECMS, whether we are talking about the iTax itself, I think they have done a good job in simplifying the processes that one should go through while just trying to be compliant. So it's important to take advantage of these tools at that level, and even at the business level. There are many tools that can help us file accurate returns. For example, I've talked about the accounting systems. They are very necessary. They are very necessary because they are efficient, and also they help you to, to make things easy, especially when you are required to file accurate returns at any given point. And lastly is on taking advantage of the tax amnesty and also the incentives. I cannot overstate the importance of these two. It's good to take advantage of the tax amnesty because we don't know when else the government will be kind enough to forgive people their tax sins and say, just come and pay the principal tax, and we can forgive you the interest and penalties. So it's important to do that. Also, there are some incentives that you can enjoy based on maybe where you operate in. So those are some of the things that you may want look out for, so that at least you can be ahead of the curve. So that is my presentation, and like we have just discussed, we have done all what we are discussing here, whether it's tax advisory, business management advisory, we sometimes even audits, whether external or internal, they're important to your business, because sometimes, for example, you need some loan, and the financing institutions, they need you to present audited accounts. So auditing is also important. So we have helped several clients, like you can see on my screen, to just help them navigate this complex tax landscape for a number of years. I thank you for your time to listen to me, and I think we'll be now able to answer any question that the members are having. Please, Mordecai, you can take up.
Thank you, John, for that. Thank you for sharing those insights. And you're quite an eye-opener personally for me, and with regards to some of the tips that you've shared, and also as well as tools and how you may help MSMEs when it comes to issues relating to tax. So I can already see on the chat there are quite a number of questions, and we'd love to take all of your questions. But with regards to time, if you feel like you have a pressing question but you want to be able to address it, we'll share contact information of our partners from J&D, and they'll be able to respond to that. By just heading to the chat, I'd like to read over some questions, and hopefully John will be able to respond to them. So there's a question from Magina Multi-Serve Cleaners, I guess. So do you pay statutory deductions if the company is only engaging casual workers as and when gigs arise? John, if you can take up that question.
Thank you, Mordecai. I can't trace the question. Could you please come up again as I try to look at it from the chat box?
Do you pay statutory deductions if the company is only engaging casual workers as and when gigs arise?
Yeah, okay. It depends. If they are regular casual workers, if you deal with them every other month, the law requires that you also compile that and do the declaration or the disclosures. Remember, for pay obligation, you are supposed to, that one applies to staff whose salaries are above 24,000. But you also require just to make those declarations. So if the amounts that you are paying them are below 24,000, you just declare, but nothing will be payable as far as payee is concerned. But if the casual workers, they are not regular, what you do, you just do the withholding that we talked about. You will withhold, okay, depending on the service that you are dealing with. For example, if it is just the normal consulting work, you will withhold 5%, then pay them the remainder. I hope that answers the person who asked that question.
Thanks for that. We'd like to move quickly. So there's another question. How do I change from corporate tax to turnover tax?
You just register in iTax for that obligation, and it normally follows just a simple process, and possibly it will need some action from the revenue authority once you have initiated that process for that obligation. So that can be done through iTax.
So there's a question from Flossie saying, how do you apply for payment plan? So all the pending interest and penalties can be automatically waived, even if you have not completed paying the principal tax. John, if you can.
Yes.
How?
One, for you to agree to a payment plan with the tax authority, you must get to them. You see, for you to be forgiven the penalties and interest that are related to outstanding principal tax, you must have first agreed on a payment plan that is within the window. For example, if today you have some outstanding tax of, let's say, 2,000 with regards to 2023, and that has attracted maybe some penalty and interest of around 500 Kenya shillings. So before you are forgiven the 500 shillings penalties and interest, you need to agree on, if you are not paying instantly or one time, you need to agree with the taxman how you are going to clear that before June 30th. So I believe right now we are left with only March, April, May, June, 4 months. So you will need to agree on a payment plan first, so that now as you pay, the interest and penalties charged to that principal tax, they are waived. I hope that helps the member who asked that question.
Thank you for that. I can see there are also some who are also replying to some of the questions. You see, we have a lot of experts here, but again, with every advice, also remember to do your own due diligence to ensure that whatever you are doing is
Yes.
part the provisions.
Yes, I have some of my members of our team who are answering those questions.
Okay, then that's okay. Then let's get to the next question. So there's this question that has been responded to on the chat about e-teams. I think someone asked regarding e-teams, why is it that when doing business with government institutions, they demand e-teams receipt, yet the annual turnover is far below 5 million? Then I think Victor responded saying you should advise them to do reverse invoicing, where they generate the e-teams invoice for you. Is it something that is applicable? Maybe you can expound on that, because this is also an issue that I've seen a lot of questions on the chat.
Yes, thank you, and I highly appreciate the input by Victor. Now, where your turnover it's below 5 million, the people you do business with, suppose, for example, you provide your services to a bigger organization that is above 5 million mark, so it's registered for VAT and e-teams. Nowadays, they are able to do what we are calling reverse invoicing. And what this means, they will be doing or they will be generating e-teams compliant invoices on your behalf, because now you are not eligible as per the law to register. So that should not worry you. But remember that now is a declaration. It's the declaration to the taxman that, for example, SME by the name X, if previously you were not disclosing your sales, so by your client doing reverse invoicing, they are declaring that actually you have earned that income. So, and at the end of the year, you'll need to also pay taxes for that. So that is important for businesses to know that reverse invoicing is designed to make sure that even their incomes they are visible by the taxman.
Thank you for that, John. Thank you for the reply. I hope that has cleared a lot of confusion. So maybe expounding on that, or not you said with regards to the reverse invoicing, does that mean that if they do that for you, then it will reflect that you've earned, maybe you've done business with them? Does that mean that it will land you in problems with the KRA when it comes to reporting on maybe your sales or the businesses that you've done in selling your products or services? Will that land you into problems? Just want to make that clear.
Okay, I get you, Mordecai. What that means, like I was trying to explain, you see, previously, without reverse invoicing, businesses that have turnover below 5 million, they were just required to do self-assessment and do the returns. So whatever you provide to the taxman as your rightful tax obligation or tax amount that you should pay, they will take that as the true value, unless they doubt and do now further assessment. But now with reverse invoicing, it means besides you doing self assessment and declaring your incomes and expenses for the year, there are those that already would have been declared by your clients. So they will already be known by the tax authority. So, for example, if maybe you have had a trend previously to omit some incomes, for example, you may not be able to do that if your incomes are declared by your clients through reverse invoicing. I think so. It is not like it is bringing more trouble to you in terms of how you deal with the tax authority. It only adds more obligation to you to ensure that at least you are up to date on what has been declared, and now you can include any other thing that has not been declared while you are calculating your tax payable at the end of the year.
Okay, thank you for that. And as we are closing, I'd also like to, if it's possible, to just welcome one SME to just give us their own personal experience when it comes to tax compliance and how the challenges they faced and how they were able to overcome that, if it's possible. Okay, I can see June.
Thank you, Mordecai. I had two questions that have not been addressed. Number one, when we talk of withholding tax at 5%, does that mean the taxpayer is to pay the balance of 25%? Because withholding tax is not a final tax like we have for dividends and all that. Then the second question is about NSSF, whereby you can have an individual contributing to the same. What is the minimum amount that individual contributor is to pay? Thank you.
Thank you for that question, and sorry for our oversight. We didn't. I think I was not able to view those comments or those questions. So number one, withholding tax, the 5% you are withholding and paying. You are paying on behalf of your supplier, the 5%. So they are supposed at the end of the year to pay for the remainder, depending on the level of incomes. Remember, we said the individual the tax bands are between 10 to 35% for an individual, and also 30% for companies. So if it is a company, they will need to pay the other 25% themselves, maybe at the end of the month or at the end of the year. So, okay, withholding is just supposed to bring in convenience for government so that it can keep the services running without having to wait at the end of the year when you declare the full taxes. So it gets a portion of what you will pay early in advance. That is number one. Number two is on NSSF. Previously, it used to be for 20, the minimum contribution for 20 for the staff and for 20 for the employer. So the total payroll cost for the employer was about 840. Now is for 80 minimum. So for 80 by 2, because the employer is matching, is 960. I hope that answers your question.
Yes, thank you, John.
Okay, karibu.
Thank you, John. Thank you, John, as well, responding to that. I guess there's also a question who asked about are they allowed to claim VAT on purchase of fuel used for company cars used by employees charged as benefit on their payslip? If you can respond to that.
Okay, thank you, Mondekai. I would say it depends. It is not that pretty straight, because KRA may decide to disallow some of those VAT claims. If, for example, if it is deemed as to be personal, to be, to be a benefit at a personal level to whoever is that expense relates to. So I think it will depend on a case by case. But one thing that is important to note, if it is for a personal use, not for companies' use, that will not be allowable as a VAT claim. But if it relates to just the normal companies' operations and expenses, that is definitely claimable.
Okay, thank you for that. I think there's Grace, you've raised your hand.
My name is Grace, and my question is so first, my experience with KRA is that has been, like most entrepreneurs, not very nice and scary. And thank you for this webinar, because it has provided some insights on what we can do to make sure that we are compliant with the regime and whatever is required. My question is around the company that I registered in 2009. I have not, I never, so it was registered, and of course on the tax system then, I think it was called SIMBA system or whatever. But the company became dormant and everything. I'd like to activate it. And my question is, when I register it on the new, on eTeams now or on iTax, will it attract penalties? And how should I go around it? Thank you very much.
Thank you, Grace. I just saw your question on the chat. Sorry for my oversight. One, there was some window towards the end of last year for businesses and taxpayers to confirm their ledger balances in iTax from the SIMBA system you are referring to, which was the legacy system for the tax authority. And that required people to confirm if the balances that will be moved now to iTax, if they tie with what you expect to be there. Maybe that is where you would want to begin, to understand if what is now in iTax right now is what that ought to be. Meaning whatever you are supposed to, for example, have paid, or any outstanding penalties or interest or principal tax have been carried now to iTax from the legacy system. Maybe that's a good place to start with. Then the other bit is if your business has not transacted for all those years, like you are saying from 2009, I think e-Teams was not an obligation back then. So anytime now you transact and in a year of income that your company now will get to 5 million mark, in this e-Teams dispensation, you'll need now to register for e-Teams. I hope that helps.
Yes, it does. Thank you very much.
Thank you, Grace, for sharing, and also thank you, John. I guess that brings us to the conclusion of today's webinar. Yeah, there's someone who said you want the contact information. We'll share that on a mail after this session with the contact information for John. But also, John, you can just go to the last slide where you have your contact, where there's the contact information as well, where people can also reach out in case. So there's the information there where you can reach out to them as well. If you have questions that you feel like are really urgent or important, but they haven't been addressed. So as we are winding up, I'd just like to give the last opportunity. I see Mary, you've raised your hand as we conclude on the sharing part. All questions.
Hi everyone. Thank you for great insights on the issue of VAT. The question I just wanted to ask, which I didn't know because my business is registered with VAT and e-Teams. It's a small business, and the revenue it's way below 5M, and I didn't. Actually, today I'm supposed to do to remit of the returns because today is 20th. So the question is, because I'm supplying some products to the supermarket, we just started the other day. So am I supposed to apply with the supermarkets we are supplying our products to do a reverse invoicing? If John can clarify.
Yes, okay. I need first to get you clearly. So are you right now registered for VAT and e-Teams?
Yes.
Now, if you are registered for e-Teams already, you can proceed to generate the invoices from e-Teams yourself.
Yes, I do.
So that is the ideal process because you have already registered. So, and that is some communication you need to make with your client so that they don't also proceed to do a further generation. Maybe thinking you are yet to get to the mark. So I think it's a concept of communication now. Otherwise, you will continue to file for VAT returns normally and also make the necessary payments. And then I've seen in the chat box some participants asking for our contacts. That is what I have displayed on my screen. So if maybe you have some challenges with regard to what we have been discussing, you can reach out to us and we'll be happy to help.
Thank you for that, everyone. I can see Josephine, you've raised your hand, but you're a little bit out of time. But I'll give you like a minute to just share what you have. Not even a minute, around 30 seconds, if it's possible.
Okay, me, I've been trying to raise my hand, but nimekuwa shida kwa machine yangu, but it has managed. My question is, I'm a service provider, but I buy most of my things from these people who do not have receipts. They don't generate any receipts. How do I now do my taxes? Because I'm not getting any receipts. When I send my things through the matatus, there are no receipts. What do I do? And I'm incurring a lot of expenses. But how do I do my tax?
Okay, those cases they are pervasive. They are everywhere. Especially you are dealing with the informal side of our businesses. You are dealing with even a provider of a service that may not provide you with an e-Teams receipt.
Yes.
So since now the burden is on you because you want to claim those expenses. Number one, I think that will apply to your discretion and how you are able to communicate the same to them first they understand. The second step would be if they provide you with their PIN, maybe at the point whereby you are interacting with them, if you're able to get their PIN, then you are good because you can do what we are calling reverse invoicing. You can, after you are done with that engagement, you can proceed to eCitizen. There is a process that you follow, and then you are able to generate an e-Teams compliant receipt on behalf of that client or on behalf of that supplier. So maybe those are some of the considerations that you can make. Maybe. Sorry.
My problem is where I get my small, the welders, the carriers, they don't have even the PIN. But my customer wants an e-Team. So I give e-Teams invoices, but how do I claim? Because I don't have nothing to claim to.
Sorry, I didn't get you on the point of claiming. Sorry, please come up again.
Okay. When I get these services from my provider, they don't.
For example, in this case, give an example. This provider is
an example, if I send an item through Matatu, the carriers, they don't have receipts. If I go to a order in Gikomba, they don't have receipts. But whoever I'm doing the work for, when I'm invoicing, I go to the e-Teams, I generate an invoice. Now, how do I claim?
Yeah, now I get you, Ross. And like I began with saying, these are challenges that I think every business is facing right now. And these are some of the complaints or feedback that KRA has been receiving. I'm sure they have received these kind of responses in their thousands, because there are instances where you will never get the e-Teams receipt. And I think maybe where possible, my advice would be where possible, where you have alternatives, to use a supplier who have an e-Teams receipt. For example, a good example is if, for example, you are sending some parcel to some place, do you have, for example, an option of using a company that usually generate e-Teams compliant receipts? So if you have alternatives, you can opt for the alternatives. Otherwise, the others may be outliers. You really don't have any control over them as at this point. But maybe as time goes by, because I believe those are also some teething problems insofar as usage of e-Teams is concerned, probably KRA will be able to give better guidance as time goes by.
Okay, let's hope so, because our work cannot wait for the companies to transport items 24 hours, and you can give a matatu, it will take 2 hours, and the thing is there.
Precisely, I get it.
Yeah.
Okay. Thank you for your question and your insight.
Okay, thank you for your answer then.
Okay.
Thank you, Justin, for that. Thank you, John, as well, for responding to that. And thank you so much for everyone who has created time to be available for today's session. I hope you liked it. And I can see from the questions, we were not able to respond to all of them, but I can see the urgency on that. So there's the contact information there. But there's also the MSME Financing Gateway, where you can get access to the different services that John Daniels and partners are offering. You just have to visit the MSME Financing Gateway. We'll share the link to that as well. And also, we are planning on having a matchmaking session, a physical one, just like this one, to be able to make you or create a platform where you can be able to interact with some of the business development service providers in person. You share some of the challenges you're going through with regards to the services they are offering. And then from there, the physical interaction will shed more light on what are some of the things you need to do. And will also provide an opportunity for you to be able to interact with them. There are also different opportunities here that on the programs that you're doing that we will share with you on the mailer. So if there's anything that is particular as spiked your interest and you'd want to know more information about, feel free to reach out. And we'll also share some feedback survey where we'll request you to give us your feedback on how the session was, and if there are some things that you still want to know more about, and if you'd prefer to organize a BDS matchmaking physical session where you can be able to interact with them. But that has brought us to the end of this session. Thank you so much. Thank you, Grace. Thank you, Daisy. Thank you, Beatrice. Thank you, Rose, for being available. These are just some of the people that I've seen on the chat. Thank you, John. And as we started with the word of prayer, I'd also like us to close it off with the word of prayer. And if Grace, you can pray for us.
Dear Lord, we thank you for giving us an opportunity to learn on how to grow, broaden, and sustain our businesses. And we ask that as we go back to our businesses, you give us the energy, the strength, and the grace and the courage to foster forward and be able to grow our businesses and grow our economy and make our country better. Thank you, and be with us today and all those in Jesus' name. Amen.
Amen.
Amen. Thank you so much. That's the
Mordecai,
end. Yes.
maybe before we end, I know some may be asking whether they will get the slides, maybe for reference. We'll be able to send for all the participants who registered for the webinar.
Thank you, John, for that. We'll definitely share the slides with you. But thank you again. It was a pleasure to have you today. And feel free to leave. And just a shout out to some that were able to be here. Thank you, Abigail. Thank you, Caroline. Thank you, Bernard. Thank you, Benson. Thank you, Beatrice. Thank you, John. Thank you, Joan. Thank you, Grace. Thank you, Gashau. Thank you, Sheila. Thank you, Sarah. Thank you, Vivian. Thank you, Winnie. Thank you, Violet. Thank you, Mehul. Thank you, Molly. Thank you, Nancy. Dala. Thank you, Onesmus. Sorry. Thank you, Victor. Thank you, Susan. Thank you, Tashi. Thank you, Victor. And those that I've not mentioned, thank you so much for being available for this session. Hopefully it helped you to get to understand some of the things that are challenging to your business. And with that, I'd like to say a good thank you and have a great day ahead of you. Nancy, you've raised your hand.
Yes, I would request to invite these participants to our webinars that we have every other month. We have Wezesha SME webinars. They're just like this. So we have them every other month to discuss taxes and topics of interest. So they can look into our social media platforms to get the next webinar and attend. Thank you.
Thank you, Maxi. Those that are still in, I've got that. And with that, I'd like to say thank you very much and have a great day.
This is brought to you by John Daniel and Partners, LLP.